One. Today my topic is income from house property introduction. First of all, we are going to see the introduction of income from house property. First of all, definition. Income from house property refers to the rental income received from letting out a property or the annual value of property that is owned by a taxpayer or assessee. It's taxable under section 22 of the Income Tax Act 1961. Types of property: the property or residential property, commercial property. Now in this topic we are going to discuss about residential house property or residential house property or house property. That's types are. For tax purpose it is categorized in three ways. First one is let out house property, self occupied house property, deemed to be a let out property. First of all, let out. Let out means a property rented for out of all the years. Next one is self-occupied house property. A property used for the owner's own residential purpose. It can be gross annual value is 0 or nil. Next, last one is deemed let out property. If a person more than owns two self-occupied house property, an additional property considered as deemed to be a let out for tax purpose. Their GAV is determined on the basis of let out house property. Next one is exemption in house property. What are the exemptions house properties are? Self-occupied house property, property held for stock in trade, property used for business or profession. Next one is agriculture farming house, charitable trust, political parties, registered trade unions, scientific research associations, local authority, educational or medical institutions, ex-ruler of palace. These are the exemptions given in the house property. Next, annual value of house property. Definition: annual value. How will be annual value calculated? Means actual rent received, fair rent and standard rent. The annual value of house property is determined by the higher of actual rent received by the owner from the tenant or the expected rent that a similar property would earn in the similar locality, or standard rent fixed by the Rent Control Act. In case of self-occupied house property, first of all we are going to see the self-occupied house property. If the property is particularly for self-occupied means the annual value is nil. The annual value is nil. No income in such case of property. In case of income from let out property means we want to be calculated annual value. Annual value, the income from the house property that is let out to the tenants is fully taxable. The annual value is actual rent received less than the permissible deductions like property taxes, interest on loans. The type of let out properties, the same residential property or commercial properties. Taxable income. After property taxes, interest on loans and standard deductions, the net income is taxable under the income from house property. Next, self-occupied property. How it is taxable? A property that a owner lives in is considered as a self-occupied for tax purpose. Annual value for the self-occupied property is nil. Deductions: for a home loan, interest is available up to 2 lakhs. No rent earned. Since no rent is earned from self-occupied property, it does not generate taxable income, but it may be qualified for deductions on home loan interests. Next, our topic is deduction. Next, we are going to see deductions under section 24. What are the deductions available? Standard deductions, interest on home loan, property taxes. Standard deductions, as a flat deduction is 30% annual values allowed to cover the maintenance of and repairs of house property. Interest on home loan, interest paid loan taken for purchasing, constructing whether or repair house property is deductible. Maximum deduction is allowed 2 lakh for a self-occupied property, and there is no limit for let out house property. Property taxes. Municipal taxes paid by the owner are deductible from the annual property of the house property. These are the deductions allowable under the section 24 in the income from house property. Thank you for watching.